We step back into the markets today by looking at results inside beyond markets, but this is well warranted. Let's begin perhaps first of all by just looking at the main drivers of the results that we saw. An increase in earnings by a third in anyone's book is indeed good.
Yes. Thank you, Godfrey. Thank you for hosting me to this show. Really, we are delighted to be sharing the results with the rest of you. As you have said, 30% growth is commendable, and we are very happy about the results. There are two factors which really drove the results up. One was the issue of the hydrology, because we had better hydrology. Towards the end of last year, we had very good rains. And the second one is, of course, the availability of our capacity, because as you are aware, our power purchase agreement with KPLC is based on capacity charge. Depends on how we are available, how much our machines are available to generate. And therefore, we made a point of making sure that all our machines are available most of the time. In terms of maintenance, we have gone into what we call condition-based maintenance, and therefore we have been more available than we have been before. And we will continue on this trend, and we're also hoping that the rains will be as good as they were towards the end of the year.
Yeah.
And therefore, our results should even be better than what they were over the first half.
Now, another line that stood up for me in those results, apart from the bottom line, of course, was your tight control and costs. We're looking at an 11% increase in an environment where we know inflation in Kenya hit as high as 19 to 20%. Just how were you able to do that?
Yes, as perhaps you're aware, we have a transformation plan that we are going through. And one of our focus areas is what we call OP2, which is operational excellence. And in this, there are various cost-cutting measures that we are looking at. And part of that is to do with the bigger spends that we do, especially the fuel, the spares. We have got into spare pools to make sure that we can get spares much more quickly and cheaper. And also we are looking at things like total cost of ownership, where we are not just buying an item because it's cheaper, but really looking at the total cost of that unit that we are buying in terms of the life of that, and looking at the total cost of ownership. So there are many measures that we have taken. We have optimized a lot on our staff, although we have not declared any redundancies at all, but we have tried as much as possible to optimize on the staff that we have. So it's a mixture of cost-cutting measures and tightening, as you have said, on our expenses to make sure that, yes, and 11% is, again, a very good, commendable increase in terms of costs.
Absolutely, and I suppose that also flows through into the rest of the income statement, because now we're looking at gross profit margins improving across the board, 24.24% the previous year to 28 or 29% the new in this period that we're talking about. Operating income profit margin also improving 29 to from 29 to 41%. The question is, how sustainable is that?
Yes. Yes. I hope we can be able to sustain it, Godfrey. I really hope so. And we are trying to make a point of going ahead with the measures that I've just enumerated. And really, if we can be able to contain the cost and be able to make sure that we are available for generation, then the rest of it is just a question of hydrology, because we are still very hydro dependent. And we are hoping that if the rains are good, then we should be able to sustain even the 41%.
Yeah.
But over and above that, of course, we are moving to geothermal, and we are hoping that by the time we move to geothermal, we can sustain our results better without being dependent on the hydrology.
Yeah. Do you have any specific target for that operating profit margin?
Well, the operating profit margin, as I say, we are looking at, our target was actually about 30%. And that's what we are still aiming at, and we hope that we can be able to achieve that. over the next 6 months.
Absolutely. So certainly the hope is that you don't bring it down from 41% back to 30%. But let's talk about the future. Now, you're putting a lot of money into the ground. Let's talk about those numbers.
30%, yeah.
How much are you looking to put in terms of your future capital expenditure into the business?
Huge sums into the capital expenditure because we are in an expanding mode. As you are aware, this country's total installed capacity is very small at 1,600. The peak demand is only 1,200. But we are hoping that going forward, this is going to go up to about 3,000 by 2015 or thereabouts. And by 2030, we hope that the peak demand will be about 15,000 megawatts. So we do need to build another 12 to 15,000 megawatts between now and 2030, which is a lot. And what we have done is to realize one of the biggest potentials that we have in this country is geothermal, which we have not exploited in the past. And this is where most of our efforts and our funding will be. Of course, it's a very capital-intensive venture. Geothermal is not a very cheap source of energy, but in the long run, it's one of the cheapest because once you drill the steam, you can exploit it for the next 25 years or so. So that's really what we are aiming at. And if you look at the project that we are doing right now, 280 megawatts, that is at a cost of about $1 billion US. The next project we'll be doing is another 400 megawatts, which will be possibly at another $2 billion US.